Oliver, we've another big announcement from RBS, which is 80% or 82% owned by the British government after its problems 5 years ago. Can you just summarise really what is the important bit of this announcement and what is really different from the various announcements we've had in the past?
So there are three really important bits to look at. The first is the creation of what they're calling an internal bad bank. The government's been investigating whether to completely split RBS up into two, into a good bank and a bad bank. It's decided not to do that for all kinds of reasons. It would have been very difficult. But they're creating an internal bad bank, so a division internally into which they're going to put assets that they don't like. It's already really got this. It used to call it the non-core division. Now it's calling it the bad bank. It's about the same amount of assets in there, albeit they're slightly different assets. But basically, it's going to create this bad bank. It's going to take a big write down in the fourth quarter on the value of assets in it, and it's going to look to accelerate the rundown of it. So that's the first part of it. The second part is it's going to improve its capital position, largely by IPOing floating Citizens, the US business. And the third part is there's a new focus on SME lending, and we'll get more detail on that in next February when it has its results. It's going to come up with its SME lending strategy. None of this has been terribly well received by the market. The share's down about 7% at the moment.
Well, one can see why, I think. I mean, the first, as you rightly say, the first part of that is no real change. The second part, presumably the sale or the IPO of Citizens is because they can't raise more capital any other way. And where does this leave us in terms of the government's ownership of this bank? I mean, is that now pushed out to the very distant future?
Well, possibly, yes. RBS would say that this accelerates the government's exit, and that by getting rid of the non-core assets, the bad bank assets, more quickly, it will make it easier for the government to sell. That said, it's made it perhaps a less attractive asset to buy into, but particularly that they're selling the American business, Citizens, and that's a decent business. Maybe if RBS had been able to raise capital in other ways, it wouldn't have had to sell Citizens, or at least not so quickly. And there's also concern perhaps about this new focus on SME lending. As an investor, you'd have to question whether RBS is going to be pushed into lending unprofitably or into lending to people that it might not have lent to otherwise, because that's what the government wants it to do.
Well, it all sounds like a mishmash between commercial objectives and slightly broader political ones, but it would be interesting to see how it all works out. Thanks, Oliver.